Hi there, and thanks for joining us here at PhillipCapital Market Watch. I'm Ethan, Business Development Executive from Phillip Futures. Since the second half of 2019, Fed policymakers have illustrated for a dovish pivot in monetary policy, and the central bank has since lowered interest rates cumulatively by 75 basis points. Coupled with optimism on the US-China trade talks on a Phase 1 trade deal, we saw major US indices rallying upwards with the S&P, Nasdaq and Dow clocking all-time highs. However, downside risks continue to loom large as there is little clarity on the Phase 1 trade deal. US has also scheduled additional tariffs for Chinese imports on 15 December. Should there be a tariff hike, we expect for softening across the major US indices. Additionally, President Trump is also expected to sign the Hong Kong Human Rights and Democracy Act into law amid strong support in the US House and Senate. Markets have turned increasingly pessimistic over chances of success in the ongoing US-China trade talks, as Beijing vows to impose countermeasures to defend its sovereignty and security. Negative impacts from the trade war have also transcended to major economies. The US GDP, a key indicator to gauge the health of a country's economy, has softened since March along with other major economies globally. The escalated trade war has also taken a toll on US manufacturing sector, and the US manufacturing PMI has been on the decline. Since August, the PMI has fallen and maintained below the 50-point mark, indicating that the US manufacturing sector is in contraction, a clear signal that economic growth has been slowing. The central bank has also provided forward guidance to keep interest rates neutral, and financial markets have not priced in for another rate cut in the upcoming FOMC meeting. However, they may look into adjusting their approach and potentially cut interest rates further should the US economy show signs of stress in the upcoming months. If that happens, we can expect it to act as a catalyst for US indices to continue rallying. Do note that the fundamentals remain weak for the US economy, and we caution against exceedingly bullish calls when trading the US indices. So how can you as investors speculate the US markets? Phillip Futures offers futures contracts for these US indices. Futures trading is also bi-directional, and you may adopt a short position should market opportunities call for it. Also, with the newly launched Micro E-mini futures, a large capital is not needed to gain exposure for speculating the US markets. To learn more on our existing promotion, please visit Phillip Futures website or contact our hotline at 6538-0500 for further details. That's all for today's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what you think. Is the 10-year bull market coming to an end? Thanks for joining us and see you soon.